Eric here from Traders Helping Traders with this week's market update for the currency complex. Well, let's begin with the British pound. The British pound fell off considerably last week before rallying slightly on Friday. Now, this is the open session. On the open session, this still looks fairly bearish. However, if we take a look at a combined chart, we would see that this market is in fact rallying once again. This fact is further evidenced by a slight increase in DMI. Now, as you know, DMI is a directional indicator. It shows us in graphical form which way the market is trending. Now, right now, this is very obvious. The market is still in an uptrend, and we could actually draw a trend line similar to this. So all our efforts will be right now to buy this market. Now, what I'm going to do is we have the reactionary high from the week before back here at 272. This particular bar is going to set the range for our entry parameters, and what we're going to do is we are going to set our entry about another 50% above the range of this bar. And what that does is it takes into account the current market volatility. Larger bars require a further entry, smaller bars require or allow us a closer entry. I should be risking the trade all the way down here to the 199.55 low. However, that's going to place way too much money at risk. I'm going to use this intermediate support around 225. That's going to put the trade on for about $500. Profit target is long-term resistance just above 203.50. Just a quick overview, the Canadian dollar is another market I'm keeping an eye on. We have a very similar look to what we're seeing in the British pound, where the market is currently trading right here off of this resistance. Looks like around 89.93 in that neighborhood. This market is long overdue for a bit of a pullback phase, however. You can see we've been rallying since the first week of March when it put in a bottom, and it hasn't really looked back. So we've cleared all the Fibonacci retracement levels. The trend is not quite as strong as it used to be. If we take a look at RSI, you can see that we are relatively overbought, and while that does not mean the market will reverse, it does increase the likelihood. I wouldn't expect a big reversal at this point in time, but just a little something to allow us to get back into the game. And a quick look at the Japanese yen, which has made support down here at 84. You can see we have 1, 2, 3 hits just in the last week and a half. If we go back a couple of months, you can see we have several more hits all at this 84 area. Now, this is a very tempting sell, and I might be kicking myself around the block for letting it go, but the reason I am not selling 84 is because of the lows at the contract lows down here at 83.50. There's just not enough money in this particular trade to put on a position trade. You could certainly day trade it. You can see we have about $700 worth of profit, but to put on a position trade, we would be hard pressed to get our stops to break even. So I'm going to let that one go until I see what happens here at the contract lows. And unfortunate end to our Mexican peso trade. I was a little bit quick on rolling the stops up. In hindsight, I should have left it one more day, but the market continued higher, but not before stopping us out first. So we are currently flat, the Mexican peso, and we will be looking for another chance to get into that particular market, but just not this Monday. And that's your currency market update for this week.